across the board, even if they can't articulate it. I don't think political affiliation has anything to do with it.
The land of Arcadia.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics for this week's physical silver and gold market update with Andy Schectman, where once a week we check in on what's happening in the physical market, because obviously if you've been listening to the show for a while, you hear all the time that the paper is doing this, the physical is doing that. I still expect at some point for those two factors to converge, and that's why we have Andy on each week. So Andy, thanks for joining me again this week. How are you doing today?
Hey, Chris, I'm good, buddy. Nice to hear your voice. Thanks for having me back.
So I guess to start, very challenging week, I think, for many Americans, probably everyone, because no matter what you believe, there's someone else that believes the opposite. And understand it's a challenging time, certainly with the things that are going on in government that I guess we're not supposed to talk about. But that aside, how are people responding in terms of physical metal based on what we've seen since last Wednesday when there was that event in Washington?
It's interesting, Chris. I played sports my whole life, and sports in many ways has defined my life from the time I was a little kid until today. And if you have ever played team sports and you are immersed in a game, you're wholly focused in a game, you can sense when something is changing in the tide of the game. You can sense one moment that turns the tide of the game, even if it's not noticeable to most people. If you're deeply immersed in it, you can feel it, you can sense it. It
Andy,
could be, yes.
This isn't about Mike Tomlin not going for it on that 4th and 1, is it? Because that was
No,
actually
it's
a great
not,
example.
But that's the point I mean, is that you can feel it in your bones. Something's changing. Something is happening. I believe we're all blessed with good intuition, Chris, all of us. But I also believe most of us go through our lives and say, damn it, I knew I should have done that. Damn it, I saw that clearly. I think people are getting concerned across the board, even if they can't articulate it. I don't think political affiliation has anything to do with it. I just think that the bottom line is people are getting concerned. And that's the overwhelming feeling that I get from the people that we talk about. There is a feeling of unease, that something is turning, that something is changing, that we are heading down perhaps the wrong road. And it's kind of like the missed field goal, and you can feel the whole game is going to change right now. And that's kind of how I feel. And I think that's kind of how our clients are feeling. And there is almost a feeling, not quite of panic yet, but maybe the early stages of it. People are very scared that the time is running out to protect yourself. And I think it's also really important to remember that you and I aren't talking about people getting wealthy. We're talking about preserving what you work so hard to obtain your whole life through struggle and effort. It's about return of your money more so than return on it right now. To me, that is the most important thing to keep in mind.
Yeah, and in terms of that, did you see any change in the order flow over the past week, or what is the actual sales trend like?
The order flow is massive over the last 2 weeks. In fact, it's a noticeable difference. People are gobbling up gold and silver, mostly silver, and they all seem to want it immediately. They don't want to send a personal check that takes 7 days to clear. They want to send a wire and get it received immediately. I think there is a growing sense of tension surrounding what's going to happen next week with the transition of power. And there is an overwhelming sense of unease across the board. So in general, it's important to realize that the manipulations on the COMEX market have little, if anything, to do with the physical demand in this industry. And when you see a paper price that was rated on Friday last week, dropping the silver price by over $1, that was completely non-reflective with physical demand. As the physical demand accentuates in moments like that, people are being able to see the transparency and the desperation of a market that is slammed down in the middle of the night in the United States, as we are heading into, when Asia's closed, the morning in the UK, at the AM fix, they knock it down. And then again at the PM fix, people are realizing that this is desperation. And so I sense that the efforts by the banking cartel to suppress the price are growing less and less effective, and they're becoming more and more transparent to the people who are using said pullbacks as a subsidy to increase their holdings. And so, yeah, I would say to you that it seems to be getting a little bit more interesting day by day. The resistance is growing in numbers, is growing in strength, and as I've said many times, thanks to people like you, their intellect and understanding is growing, and perhaps even their frustration is waning, because they realize that the way to win is to accumulate on the dips, and that the numbers and the economics behind it are growing more and more and more relevant in favor of protecting your wealth right now with silver. And not only can you protect your wealth, you can grow your wealth in what I believe to be the most undervalued asset on the planet. So, yeah, it's an interesting time for sure, Chris.
Yeah, and it's interesting you mentioned intuition, which is something I've actually actively studied, that topic and how one can harness that. Actually met a guy years ago that used to train Navy SEALs back in the 60s. If you have a decision of going left or right, that means living or dying, how to use your intuition to make the right call. This was even before the men who stare at goats. So again, call this just my intuition, but it sure feels as if there's at least a chance that there's some finale, like the final scene of the movie playing out, that unfortunately we don't get to see directly now. And I wonder, a month from now, maybe things will be extremely good, extremely dangerous. Who knows? Although I just to be clear for anyone out there, I certainly don't advocate anything violent. And especially now, it's kind of almost like an intellectual war. We're just, sharing truth and information, which I think is important. Although, Andy, back to the silver and the dollar. We're told the dollar is based on the full faith and confidence of the U.S. government that's running the biggest Ponzi scheme in history. It seems like now we're staging episodes of Rambo in the Capitol building. So when you mentioned that there was the big sell-off on Friday with silver and gold, at least representing what the dollar used to be based on, am I correct that selling was not some group of people who were saying, wow, things are going great here. I feel more confident than ever in U.S. government?
Yeah, right. Well, it is done specifically for effect. I've mentioned the name Dimitry Spivak before. Dimitry Spivak is a fantastic technical analyst who has shown very eloquently how they rig the market. Whoever they is, let's just call it the commercial banks or the central banks or the people pulling the strings at the BIS. But I would often use Dimitri's chart during speeches where he would show 10 years worth of trading, all of the days in 10 years crammed into one chart. And you would see an overwhelming pattern of the AM fix and the PM fix in London being the smash times. Every single day over a period of 10 years, at least it looked that way on this chart, that when we would hit the AM fix in London, they'd beat the crap out of it and hit it twice as hard at the PM fix as New York City was coming online. The ability to knock it off cut it off at the knees before it hits New York trading has been playbook 101. And that's exactly what they do. You see, it's about controlling sentiment. Sentiment and price can control narrative. And that's exactly what they do. And then allowing them, whoever them are, to amass massive amounts of physical metal at subsidized prices to knock people off the trail. And it's ironic in a period of time where information flows so rapidly and when it's available so readily that they're still able to pull this off. But that is exactly what they're doing. It is counterintuitive manipulation. When we would expect it to be going higher, they hit it hard so that the rationale people would employ for leaving the dollar, for selling traditional assets, and for freaking out and buying precious metals is severed. And that's the part about intuition that's really important, Chris, and trusting our gut and not going through life saying, damn it, I saw it, I should have listened to Chris, I knew it. But that's exactly what they do in counterintuitive fashion. It is right out of the first page of their playbook. Whenever it should be going up, hit it. Whenever it should be going down, let it run. A lot of people have noticed this year that when the stock market goes up, they let gold and silver run too. That the link between the two seems to be strong. And I would argue this is right out of their playbook. In other words, delink the rationale people have for running to gold. So when all assets are running, they let it go. But when the markets are getting clubbed, well, it was a rush to liquidity. No, it's not a rush to liquidity. That's bullshit. It's not a rush to liquidity. It's about managing perception of reality. This is a big game. All you need to do is take a step back and look at over the last 4 years what the biggest money in the world has been doing. They've been accumulating gold and silver, period. And they've been putting it away and taking it off the exchanges and pulling it back from the central banks, the Bank of England and the New York Fed, rather. And they're doing it in concert and have been doing it for the past 4 years. So if this is important for them to reposition, if this is about a great reset and global repositioning, well, the people who are pulling the strings don't want to be crowded out of their trade, and they want to suck as much metal up as they possibly can before the price runs. And the only way to do that is to misdirect the public on every single turn, because there just isn't enough gold and silver out there. As you've been talking about, a 300+ million ounce shortfall last year. There just isn't enough silver out there for them to fill their coffers if they have to compete with John Q. Public. So every single chance that they get, whenever there is an opportunity to knock the wind out of the public, it happens. And you know, I find it also interesting, and I just would like to mention briefly that I think everyone needs to take a step back and realize that the returns we've seen in the cryptocurrency market are not normal, okay? They've been fantastic. They've been amazing. But this isn't how traditional investments work. And okay, throw the word traditional out. It's not how investments work. Yes, it happened. Yes, people who got in at the bottom and watched this amazing run have been wildly fortunate. But to say that silver's not doing anything, and even though it's been frustrating, but to see it up 50% since January and over 100% since March, I think people need to take a step back and realize that you don't see parabolic returns in any investment all the time. And I think people's expectations need to be tempered a little bit. You take cryptocurrencies out of the mix, silver performed better than anything in the financial universe. And the fundamentals behind it are as good as Bitcoin in many respects. It is a depleting asset, or one that is, shall we say, there isn't an infinite supply. And there are uses for it across the board whereby the demand will sharply outpace the supply. You could argue it's very similar in some respects to Bitcoin. It has that type of potential, but that's not why we buy it. Certainly, it's nice to know that it has that potential. And I think that that's really one of the things that people need to take a step back and realize that they're buying gold and silver, and in this case, mostly silver, because it is a supreme value and it will protect you. And it has 5,000 years worth of history, and it's private, and it offers amazing upside potential. But do not be disappointed with the 50% increase this year, 100% since March, and don't compare it to cryptocurrencies. It doesn't need to be either or. It can be one or the other, and or some of both. But I think that this is a very unique time because the demand for silver seems to be increasing every single day from an industrial standpoint. The supply seems to be getting more and more tenuous, and now we're seeing an increase in investment demand. And so you put it all together, we're going to see, I believe, this year a short squeeze on the industrials where they're going to run to secure future production. And as that happens, I think you'll see an awakening by the hedge funds to silver as a supreme value, an asset that's still well below its all-time high from 40 years ago, and one that is in constant need for whatever this world brings us in terms of a technological world where the need for silver is forever increasing through batteries and solar power and biocides, and all of the things that we need moving forward are found in silver, yet silver's harder to find. So it has the fundamentals, it has the story behind it, it has the supply demand side fundamentals with it, and it has the most sophisticated, wealthy traders on the planet, not only accumulating it, but obviously frightened by the demand that it is showing and doing all they can to shake people off the bull. The bull always will want to shake as many people off as possible. And I think that in and of itself is very telling as to where this is ultimately going. If they didn't care so much about it rising and weren't making such an effort to physically take possession of it the way that they have been, I wouldn't be as optimistic. But when you see the effort that they are putting in here in the later stages of the ball game to try to shake people off the trail, I think it portrays for big returns ahead for those people who are able to see that this is as good of an investment or good of an opportunity as I've seen in 30 years. I call it the opportunity of a generation in terms of accumulating silver at these levels while it's still available.
Yeah, and in terms of the functionality of silver, it's actually interesting. While you were saying that, I was realizing that if we had a 10-ounce silver bar run for president or central bank Federal Reserve chairman, I mean, this is something bipartisan. I mean, just by doing nothing, we would have all been a lot better off than either of the political parties. So again, is there anything silver can't do? Although I'll switch it over to gold for a moment, if I may here, because I'm sure you saw these. I know a lot of people saw these headlines that gold sold off because U.S. Treasury yield is rising. Now, certainly I can understand when the U.S. Treasury yield gets up to, at least as of Wednesday when we're recording, 1.1%, you gotta go chase that, despite the Fed's 2% inflation target that they may raise to 4%, who knows? But while I have no doubt that there's some algorithms that, trade pairs relationships that are hammering stuff out there. But is anybody selling physical gold? It seems hard to me to imagine that someone who actually owns physical gold would say, oh my God, Treasury's up to 1.1%. I got to sell it.
Well, that's my point. I was saying with silver, they always say it's the rush to liquidity. And here they'll say the nonsense that it's about interest rates rising. In economics, there's something called the rule of 70 seconds. I'm sure you know what that is. Most of your listeners might. For those who don't, the rule of 70 seconds is a mathematical law. You take the interest rate that you are being charged or are charging someone and divide it into the number 72, and it tells you how long before your principal doubles. So just looking in the case of treasuries at 1%, it would only take 72 years for your principal to double. And of course, that doesn't take into account the inflation and the money printing side of things. In 1980, Paul Volcker raised interest rates above 17 or 18% to quell the gold bull market. That's when interest rates really have an effect. And in economics, that's called Gibson's paradox. The inverse relationship between real interest rates and gold is a real phenomenon. And I guess the story behind it is that the higher the interest rate, the less the incentive to own gold because it pays no coupon. But when you're talking about, like you said, interest rates at 1.1%, and even though that's up 20%, that's a big move, it's still 2% below inflation, as you said. And you could argue inflation is probably higher than that. And I know John Williams would tell you it's much higher than that. So you're guaranteed negative interest rates. Negative interest rates, certainly is, well, let's put it this way. Gold paying no interest is certainly better than buying a treasury earning negative interest. And so the rise in interest rates and citing that as a reason for the sell-off is just more of the bullshit. And it's how that they continue to paint a narrative to manage the perception of what's happening. These are the things that lead me to believe indeed that gold and silver are vitally important to the people pulling the strings, because they would not go to such effort to say, yeah, well, interest rates went from 0.8% to 1% on the 10-year treasury. You better abandon gold and run to fixed income. It just is nonsensical. And yet people just accept it for what it is. You would have to see interest rates go substantially higher in order for gold to be knocked off the wagon. And besides that, let's just break that down for one second. And that is, the theory is that if interest rates are high, people would buy treasuries with safety. But the question has to be asked, is the treasury market safe any longer? I mean, is it? Yes, it's backed by the full faith and credit of the U.S. government, and the word credit's kind of silly when we're 80, 90, 100 trillion dollars in debt. We do have a strong military, and they can throw you in jail. That is their power, I guess, standing behind the currency. No longer is the power gold that used to back it. So I guess all I'm simply saying is very disingenuous, Chris, and it's a really good point you brought up. I think it's a super good point, because this goes to show the narrative. They say, oh, interest rates are rising, so gold is being sold off. You're telling me that a 20 basis point rise from 80 to 1%, which is still 2, 3, 4% below the level of inflation, yielding a negative real return? Do you really think that that is enough to make people sell their gold? I would say, hell no. It's not the case. It's just more narrative and management of perception, allowing big money to continue to accumulate vast positions of metal, as we've seen over the last 4 years, as we've seen on COMEX last year, as it's continuing to happen this year with the hedge fund, the family offices and the sovereign wealth funds. Over 10,000 contracts long on COMEX right now at 5,000 ounces a pop. Big money is not selling gold and silver because interest rates went up 20 basis points, period. They're not. And the disingenuous media who tells us this, here again, it's all part and parcel with the narrative that is being created to keep people from seeing the truth. And that's what I mean about, geez, I saw that clearly my whole life. I don't know why I didn't act upon it. And I should have never listened to that crap from my advisor or from CNBC about gold selling off because the treasury market was heating up. None of that's true, and you have to be able to see through it. And I think that's really a very, very good point, that no, it's crap. You'd have to see interest rates rise so substantially that it would crash the entire economy. And that's why interest rates can't rise substantially, because never before have we seen stocks, bonds, and real estate all positively correlated to one another and inversely correlated to interest rates. Stocks and bonds used to be inversely correlated to each other. Now they are both positively correlated. So as interest rates rise, it's the trifecta. It kills all three markets. Stocks, bonds, and real estate all implode. That's why interest rates can't rise. So they get so excited when we see a 20 basis point rise from 80 basis points to 1%. In reality, it's meaningless. And the fact that the media gets off telling people that's why gold sold off, I think, is insulting.
Well, I mean, the media says lots of stuff that does seem insulting to a person with common sense is intelligence. Although, I guess that's why good that we're still on the air as of today. We'll see how that goes. Do have a reader question for you, though. Someone wrote in this week asking, if the U.S. confiscates gold and silver, are Miles Franklin vaults safe?
Well, first of all, we have vaults in Canada with Brinks, and that's one of the reasons that we do it in another jurisdiction. Of course, we do have vaults here in the U.S. with Brinks and in the Dakota Depository with Fargo. Look, desperate governments do desperate things, and I think it's always important to hold your metal yourself physically if you can first, and if not, then you work with a third-party depository. Doug Casey has always said there's a certain wisdom to keeping your metal in a different jurisdiction as your body. And so that's one of the reasons that we use Canada. We're very, very proud of our exclusive arrangements with Brinks in Canada, namely the fixed rate and also the only safe deposit box program in North America that is fully insured and non-reportable. Off the grid, if you will, our Canadian programs are non-reportable on FACTA and FBAR due to the way that they are structured. In a world of imperfect choices, Chris, it's as good as it's going to get. I think that these what-if questions are always very difficult to answer. Simply to say that we think that it is as good of a choice as you will find, but what is safe in a world where things keep on changing so rapidly? Things that people would have thought would have been unimaginable and impossible. Even in terms of money printing, in 2008, the Fed added $4 trillion to their balance sheet over 6 years. We did it over 6 months this time. Things that would have been impossible to imagine aren't any longer. So to answer that question, no, there are no guarantees. I'd like to think it's as safe as it gets. I'll answer it one other way. My business was founded on Swiss investments. In the 90s, we did tons and tons and tons of business in Swiss annuities and Swiss bank accounts. And I'll never forget getting the letters from Credit Suisse and UBS giving all of our clients 30 days to close out their accounts because of this new arcane law called FATCA. FATCA kicked out because of FATCA, the Swiss kicked out all of their depositors in the U.S. Out, and Viamet was the big gold storage hub in Switzerland, kicked them all out because of it. So, can things happen that would have been considered unimaginable? Yes, absolutely. And that's why I think you cover your bases first by having physical possession, and also by using a third-party depository if and when you have to, and best to do it outside the United States if possible. And in this case, there's not even any reporting to the federal government legally in terms of holding it outside the country. You have a good deal of anonymity right from the get-go. But yeah, there are no guarantees in this world any longer, Chris, and that's something that certainly needs to be understood. No matter what investment you're doing, I would argue, are your cryptocurrencies safe if the government wants to do something about it? Nothing is really safe anymore, and that's why they're probably trying to get rid of a currency too, and so that they can put their thumb on top of everything that we do and everywhere we are. Another reason to own precious metals, because it's one of the last bastions of safety in an ocean of uncertainty and volatility.
Yeah, and then top onto that the Wall Street media has the audacity to continue lying to people's faces, telling them that the US Treasury is the safe haven. That's kind of mind-boggling. Although, before we wrap up, Andy, I did a video earlier this week where I was saying, let's say you want to leave something behind if you have kids or grandkids or nephews, relatives, where you just want to give them something that 10, 20, 30 years later would have value. I don't know. When I compare silver, I understand. Well, actually, I don't think silver is actually volatile at all. It's a piece of metal that sits there. I would say it's the dollar that's the volatile tinderbox. But in either case, in terms of a safe haven, you just leave value and people can count on it being there 30 years from now. Good luck with those treasuries. But for people who might agree with what I'm saying there and like silver, do you have any specials this week that can get silver a little bit of a discount and get that stimulus check reinvested wisely ASAP?
Well, I do. And the interesting thing is, and I didn't tell you what the special was today. The special fits exactly to what you're saying. I'll let me expand upon that. First of all, when we talk about leaving money to our children and grandchildren, there are very few things in the world that you can leave to them that have both sentimental and intrinsic value, usually one or the other. Precious metals obviously have a good deal of intrinsic value and have for 5 millennia. But the sentimental value, dad or grandpa or grandma, mom left me the gold and silver that they put away for me with my well-being in mind. You'll find that it's not something that is readily pissed away. And it lends itself to being passed on from generation to generation. And you can see the disappointment in dad's face or grandpa's face when you actually think of spending that to go to Vegas or piss it away. My point to you is that it is a wonderful way to pass money on to your family privately that carries a tremendous amount of intrinsic value, but also the weight of it being sentimental, that it was given to me by people who love me. I'm going to use this and hopefully use it to my family's betterment. And if not, pass it on to my children. That's really the way that precious metals work. And this year, 2020, last year, right at the end of the year, President Trump signed into law a new act that is celebrating the 100th anniversary of the 1921 Peace and Morgan silver dollar. The Morgan silver dollar was minted from the late 1800s through 1904. That's when they stopped making silver dollars, and until 1921. So from 1905 to 1920, there were no silver dollars made in this country. In 1921, they picked back up again, issuing for half of the year the 1921 Morgan silver dollar, and then from 21 to 36, the Peace silver dollar. And that's when they stopped putting silver in silver dollars. The junk silver coins, dimes, quarters, and half dollars, had silver in them all the way up until 1964, and the half dollars through 69. But the silver dollars, the Eisenhower's as an example, no silver in them. After 1936, that was it. So Trump signed into law a new bill where the Mint will be producing this year, in commemoration of the 100th year anniversary, new Peace and new Morgan silver dollars. We're very excited to see those. Those should be out sometime, hopefully, in the second half of the year. But in the spirit of that and the 100th year anniversary, we are going to offer on special today for next week some Peace and Morgan silver dollars for your listeners that I have dug up that are fantastic. And we've never offered these before on the show. And I think it's something that if people want a true piece of Americana, this is the play. They're amazing. So we have all three types. We have the pre-04 Morgan silver dollars. We have the 1921 Morgan silver dollars, and we have the Peace silver dollars. So here's how it goes. For your listeners, for the Morgan silver dollars, for the Peace silver dollars, $26. For the 1921 Morgan silver dollars, $29.50. And for the pre-1904 Morgan silver dollars, $30. And if you're looking for one piece of silver to give someone who's never held an ounce of silver before or anything in their hands that's silver, the pre-1904 Morgan silver dollar is one of the coolest things you could ever give someone. Every single time I hand it to someone, they're blown away by it. And so from a standpoint of passing money on to future generations where you can be assured it's still worth something, take a look at the piece and the Morgan silver dollar, a true piece of history, some of them going back into the 1800s. It's just maybe the Morgan silver dollar, my favorite way of owning silver. So we are going to offer those to the Arcadia listeners and to the Arcadia listeners alone. It's a heck of a special, Chris. It's something I think everyone should have a few of.
Well, I sure appreciate that. And you can get more information by emailing arcadia@milesfranklin.com. And as I mentioned from time to time, again, I get it, Andy, you're running a gold and silver business and you share your opinion, but just to counterbalance that, if anybody does I wouldn't advocate this, but if anyone has physical gold or silver that they want to sell, I know you're happy to do buybacks as well. So just something for people to keep in mind. It's a full service business that's trying to help serve the needs of customers.
For sure.
And, maybe that's part of life where, you also have to share your opinions. Some people are going to like it, some aren't. And we learn to be okay with that. But either case, Andy, I thank you again for joining me this week. Certainly interesting times in the world, but thanks for checking in, and we'll look forward to doing this again next week.
Chris, let me just offer one last tidbit and I'll let you run. And thank you. And I look so forward to our weekly conversations. I would like to offer one last thing. For those people who want to sell, absolutely, we'll buy it back. We always will give you the highest bid price in the country. But for those people who have gold and are looking to increase their silver position, we would be more than happy to offer a gold for silver swap. And for those people who want to be in gold, don't want to have more silver, but want to be in gold, ultimately, I would say to you this: the ability to trade your gold at a 73-to-1 ratio and then switch back into silver go into silver and then switch back to gold when the ratio, so you trade your gold at 73-to-1 into silver. So 1 ounce of gold is worth 73 ounces of silver. And when that ratio snaps back, go back into gold and trade your silver. In 2010, we saw this with 85-to-1 ratio. 7 months later in 2011, it was 37-to-1 ratio with $50 silver and 1920 gold. I guess my point is simply this: for anyone that would like to trade gold to silver and increase the amount of gold that you ultimately can get by switching back, or just trade your gold into silver at these levels, we would be more than happy to assist in that. We would charge no commission on the buyback of the gold. We can assist your listeners on sending their gold back and swap them into silver. And if they want at that point, they can ride out the silver bull. If they decide at some point when the ratio snaps down, Keith Neumeyer's saying it's coming out of the ground at 8-to-1. What if it got to 15-to-1 or 10-to-1 or 12-to-1? In that scenario, you switch back into gold, you walk away with 5 or 6 times more gold than you traded, without spending a penny. Or you just ride out the silver bull and see where it takes you. The point is yes, we're happy to buy back, we're happy to swap, we're happy to make it easy, and we'll never charge a commission on any swap buybacks, making sure that your listeners get the most competitive rate in the country. So again, thanks, Chris. I know you got to run. Thanks for having me. Thanks for all you do, and have a wonderful day. I look forward to talking to you next week.
Well, I appreciate that. Great reason to hit the subscribe button and the notification bell, or even better yet, go to arcadiaeconomics.com, where you can make sure no matter what happens in today's society, you'll be able to stay posted and miles ahead of Wall Street. And just to further that effort, well, in case you didn't already see it, this week, first-time guest on the show that you probably know, Mario, aka Maneko64, joined me to dig into some of these issues a little bit further. I think you'll enjoy what he had to say, and that's coming your way now.